This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.
Wealth building is a game of psychology. Your psychology dictates your behavior dictates your decision making, and your decisions is what brings you your results, your outcomes. One of the most destructive psychology I see in American culture for the working and middle class is the concept of legally evading taxes by writing off everything you possibly can, which in the process destroys your provable and verifiable income for a lot of different lending products. Housing, business loans, you name it, even credit cards, depending on when you start to strive for higher limits. When you are unable to demonstrate consistent and elevating income on your tax returns, you are absolutely shooting yourself in the foot with your financial growth. There's no secret that lending, access to capital, is the fuel to building wealth in this country. And you structuring your taxes in a way that completely reduces your taxable income is as understandable as it is and painful as it is to pay taxes at the end of the year, to have to write that check. At the end of the day, you're sacrificing tens, if not hundreds of thousands of dollars for hundreds to thousands of dollars, if that makes sense. Whether it be you fighting to get a 3 or 4 figure tax return, or at least evading a 3 or 4 figure tax bill, or even a low 5 figure tax bill, you're nulling out the ability to get access to tens of thousands, if not hundreds of thousands of dollars of capital in that year alone. You have to watch your psychology around money. And this is one of the worst behaviors that I've seen in the financial space as a banker and a financial professional. I see so many people who work so hard and even have reasonable credit or good credit that cannot get qualified for homes or get qualified for real estate loans, get qualified for business funding because they cannot demonstrate income when it's time to show their tax returns. You have to pre-plan your strategy when you're on the pathway to developing your wealth. You have to look out 1, 2, 3 years, 5 years and say, where am I trying to be and what is it going to take to get there? One of the most effective ways to position yourself for high limit credit and access to prime credit loans and these, really quality loans and lending products, real estate loans, small business loans, you have to demonstrate strong income. You have to have access to other high quality credit on a personal side. You can't get access to that if you can't show income. Even high limit credit cards are going to be potentially subject to financial reviews that will need your tax returns. Please consider this when you're filing your taxes and structuring for your taxes throughout the year. It's very important that you understand that you are hindering your ability to grow all over a few hundred or a handful of $1,000s. Find a way to budget for it, save for it. Do what you have to do, but you have to show consistent and elevating income to get access to quality lending products. And I'm telling you, as a banker, as a financial services professional, I am telling you this is one of the most crippling dynamics I see for business owners and investors of all kinds. Working class people, middle class people make this decision all the time. You're trying to do this too soon in your wealth journey. When you have 7, 8, 9 figures, you can start playing the tax game. You have the wealth, you have the assets, you likely have the reserve to get access to lending other ways. But when you are in the developmental stages of building your wealth, like most of you watching this video are, then you are not in a position to write off everything and show no income and still try to get access to high quality lending and financial products. It's not a thing. You are doing it too soon. You're literally exercising the strategy too soon. You don't have enough wealth yet to be trying to preserve it or to try your best to circumvent paying it out to the government. You don't have enough yet. You have to get yourself to that point. And I'm telling you now, if you don't have 7, 8 plus figures in assets and cash, you should not be writing off anything on your taxes that's going to destroy your ability to verify your income and show an elevating income on an annual basis. So I wanted to bring this to you because literally this is one of the most crippling things I see in the financial space when I'm dealing with my clients is everybody's trying their hardest to either get a tax return or dodge paying taxes. And as understandable as it is, as painful as it is to have to write that check, or as painful as it is to not be able to get that return, that lump sum of cash back after you've put it in all the year prior, I'm telling you right now, you're costing yourself magnitudes more capital that could be fueling your business and fueling your investments by doing this. You need to restructure your psychology so you can get better results, make better decisions to get better results. I appreciate y'all tuning in, enjoying this beautiful weather this morning. Before I head into the office, I want each and every one of my pioneers out there to stay focused, stay in motion. I'll see y'all soon.